20146, your SMS line. Get involved. #BusinessIM. Welcome back to your economic review. Gabriel, let's answer that question then. I mean, we say they are stable now, but what are the chances that we might not correctly rebound? Because economic sentiment and the economic growth is exactly what is going to say whether they are going to survive or not.
So, I think we've mentioned these things sometime last week, Simba.
Yes.
One thing is that the economic growth number comprises quite a number of things.
Yes.
One, in Kenya, the biggest is government spending, and we have investments and consumer spending.
Yes.
Now, if we can look at each of those, then you'll see why and how the banking sector fits in. Now, government spending only creates demand, or rather helps the banks through the increase in treasury bills and bonds. So they lend more to the government and they get more in transactional fees. Now, the three remaining aspects are what really touch on the economy. Savings. Now, we might not have looked at these in numbers, but since 2019, we are in negative saving mode. We are consuming capital. If you look at the Kenyan balance sheet, we actually are in negative savings. We do not have savings, and KNBS has those numbers very clear. Investment. Who is investing in this economy? People have been wiped out. You have no savings. There is nothing to invest. So let's take out those two. So you're left with two things: consumer spending and government spending. Now, if banks are not lending to consumers as much as we'd expect to continue driving consumer spending, because you see, you lend to businesses, they invest more in the economy, they buy from suppliers, they employ more people, they drive consumer spending in that way. Whereas for the government, it has a bit more discretion. The government borrows for one reason or the other and spends.
Yes.
And drives economic growth. But all this is outside the banking sector, and that's the biggest challenge. So we might not eventually, or rather even in the next 1.5 years, from where I sit, we might not see the true stability of the banking sector for two reasons. One, they have a lot of money that is seated with the government. They're not exposing themselves.
Yes.
So that the amount of money sitting with government paper is going to make them look stable than they really are.
Yes.
And it's a lot of it. So that is really shielding them from a lot. So they are reporting very nice liquidity numbers because all that is money they can still lend. So they have those very good numbers that is clouding what really the situation is. Number two, banks can restructure loans endlessly, Simba. You can have a bad loan that is restructured a whole year throughout. So you can't really tell this was a bad loan until you realize it's now when they can no longer do anything about it. That's when you realize that. So really, the economy and the bank are linked. That's one. We all know what is happening in the economy, but our banks, like I've said, have really packed a lot of money with treasury bonds.
Yes.
And bills.
Pretty much.
And in cash, which
Yes.
is allowing them a lot of flexibility. So I think they are armed to weather a few things, but we will get to see it at some point in time, but not now.
All right, Ramogi, I want you to weigh in on that so that we move on to the next part of our conversation. We wait or we go by the word that they've been quite stable?
No, I would still hold that our banks are stable, but I like the analysis of Gabriel.
Yes.
It means he has quite an insight into the banking sector, which is good.
Yes.
I think I am perhaps then borrowing from what is discussed. I'm more concerned about the tendency of banks to deposit money with the government in treasury bills and treasury bonds.
Yes.
And not expose themselves by, lending to the Tom, Dick, and Harry out here. And this is probably driven by the government because the government has repeatedly done budgets with huge deficits. We are now looking at 940 billion in form of deficits for the budget of 2021-2022. That's like 1 trillion shillings, and most of it is going to come from borrowing. And so this tendency has, so to speak, crowded out small players and made the industry to be warped, if you can put it that way.
Yes.
And so it's not a good place to be as a country. It's not a good place to be as an economy. And yes, as he puts it, somehow, somewhere, at some point, we are going to see the chickens coming home to roost.
Pretty much. All right, let's move on to the last conversation point this morning, where the Central Bank of Kenya has announced plans to play a major role in oversighting mobile money in its budget policy statement 2021-2022, as the government moves to safeguard billions of shillings paid through its expanding digital platforms as the growth of the state services continues to expand. Now, the Treasury indicates that this will lead to increased risks of fraud or cybercrime, which could potentially lead to loss of revenue for the government. Treasury Cabinet Secretary Ukur Yatani says, and I quote, "To mitigate against such threats, CBK is in the process of formulating a national payments strategy to address emerging risks and guide the payment ecosystem in Kenya." End quote. Gabriel, what will a potential review of the draft National Payment Strategy, NPS, look like under this proposal in the Budget Policy Statement 2021-2022?
Let me break it down for you. They just want the small guys who are using till numbers and pay bills to pay taxes. It's as simple as that. There's a whole strategy driven by the KRA,
yes,
that needs to capture those people in the system. It's as simple as that. But I do acknowledge the quality of work in terms of regulation that comes from CBK.
Yes.
So yes, it might protect from cybercrime, etc. I think we've seen a few scams on mobile platforms. It's going to reduce that, but I know it's tax driven.
Yes. Pretty much. All right, yes. Ramogi, clear for us that conversation as well. Share the same sentiment with Gabriel?
Yes, actually, when the matter came up, the word that was in my mouth was revenue, and more revenue. Government wants revenue. And they're desperate for it at this time.
Yes.
Because some traditional sectors that used to raise revenue for them, like tourism, are underperforming. And so they are looking for where else are we going to get money? And looks like the digital mobile payment platform is a good place to get money. I say, you know what, go for it. Of course, that would mean that there will be a lot of documentation when you apply some of those things, perhaps a little more than we have right now. So yes, there is the aspect of preventing fraud and money laundering, but at the end of the day, they just want revenue.
Pretty much. Gabriel Odhiambo Ramogi, thank you very much for you two gentlemen taking your time off your busy schedule to speak to us here at Metropole Television. We do appreciate your time.
Thank you, Simba. Appreciate it. Always a pleasure.
All right. On that note, we take a short... No, we actually come to the end of the show here at Metropole Television. My name is Simba Charles. Here I take them back to the time that they came to the studio at YouTube at Metropole. And once you are there, we don't mind you subscribing. We'll actually appreciate it very much. Good morning. That is your show.